So, welcome to the session, students. We have done in the last class, we've started with the assessment of the charitable trust. Can anybody revise it for me? What we have discussed in the last class? What is the uh, like charitable purpose? What constitutes the charitable purpose?
Yes, ma'am.
Yes, Geeta.
It's charitable purpose is for public benefit, not for profit organization and all. There are two regimes. First regime, it is taxable under section 1023C, and in second regime, section 11 to 13. In first regime, university, other educational institution will come, and which is wholly for public religious purpose or wholly for religious purpose. Finance number 2, Act 24, discontinuance of Section 1023C, Clause 4, 5, 6, and 7, 6A. From 1st October 24, second regime will be applicable to it for registration.
That's right.
And
And what is the
wholly,
charitable purpose?
it's charitable purpose, trust for charitable or religious purpose. In this second regime, ma'am,
Yes. How is charitable purpose defined for 215 under 215?
charitable purpose, which is wholly and substantially owned by government.
No, no, no. So, charitable
Uh,
purpose is defined under section 215, which provides that what are the objectives for the charitable institution: relief
yes,
of poor, education, yoga, medical relief, preservation of environment, preservation of monuments, and advancement of any other object of general public
utility.
utility,
Yes,
right?
yes, ma'am.
So, what constitutes the advancement of general public utility objective? They have said that if any activities are carried out in the nature of trade, commerce, business for cess or fee, irrespective of even if I applied for charitable purpose, the income from that trade doesn't matter. That will not qualify as the advancement of any other object of general public utility, right? So, how do you test that? So, in the Ahmedabad Urban Development, Supreme Court has given the ruling that identify whether you are earning a significant markup on the cost or you are earning a nominal markup on the cost. If you are earning a significant markup on the cost, then it can be said that the activities are in the nature of trade, commerce, or business. However, if the markup is nominal, then and if the activity is incidental to the object of general public utility, then you don't need to test that 20% condition. But if you are earning a significant markup, then you need to check the 20% condition. What is the 20% condition? The 20% is an exception which is given to this trade, commerce, or business activity. That if the activities are in the nature of trade, commerce, or business, it shall be regarded as in the pursuit of the advancement of object of general public utility if the receipts from that activity are less than 20% of the total receipts. Right? So that is the charitable purpose. Fine.
Yes, ma'am.
And yes, and in terms of the 1023C, we have some of the specific trusts which shall continue to be governed under 1023C even after 1st October 2024, which is basically some specific trusts like, the PM Trust, Clean Ganga Fund Trust, all of that. The educational trusts, which are existing solely for educational purposes and not for the purposes of profit, or the medical institution, which are wholly and substantially financed by the government. What do we understand by wholly and substantially financed by the government? How much should be the receipts?
51% or
Correct.
more.
50%, right? So government grants should be greater than equal to 50% of total receipts, right? And what do we mean by solely for educational purposes? Solely
5
doesn't mean
crore
predominantly, it means exclusively,
total
right?
receipt. Huh.
So I can have the ancillary objective, like, selling the books, providing the bus facility, providing the hostel facility, that is fine. But that should be ancillary to the educational purpose only. So this should be incidental to the object of imparting the education. However, if I'm providing the facilities to outsiders, I'm engaged in trade commerce also, then it is not educational purpose. So I should be exclusively functioning for educational purposes and not for the purpose of profit. Earning profit is not bar. I should be utilizing that profit for the purpose of providing the education. If I'm taking home that profit back, then it is not for the purposes of the profit. And then the educational institution existing solely for educational purpose and not for the purposes of profit, or medical institution where the combined annual receipts are less than 5 crore. These will be continued to be governed under the 1023C. Rest all of the other charitable, religious trust, medical institution, educational institution having the annual receipts more than 5 crore will be now governed under the 12AB regime under section 11 to section 13, right? After 1st October 2024. Fine. Then we had started with the registration of the trust. How do we need to apply for the registration? Yes. So before the commencement of the activity, you need to apply for the provisional registration, which is valid for the period of 3 years from the previous year in which the application is made, right? And if the activities have already been commenced, then you can directly go for the final registration within the 6 months of the commencement of activity, which shall be valid for a period of 5 years.
5
Now this
years.
has been extended to 10 years for the small trust which have the total income less than equal to rupees 5 crores. And if your provisional registration is about to expire, then 6 months prior to the expiry, you can apply again for the final registration. Or if your final registration is about to expire, then 6 months prior to the expiry of final registration, you can apply for the renewal of the registration. Fine. Also, one more important thing over here is, what if I modify the objects of the trust? Like, let's say, for example, my objective for the trust is relief of poor. Now I'm opening up, let's say, uh, some food facility, some hostel facility also. So then in that particular case, I have modified my object. Now, initially when I had taken the registration, I had taken on the basis of my objective as relief of poor. But now my objects have been modified. So in case of the modification of the objects of the trust, we need to again reapply. Are we getting this particular point? So where the trust or institution has undertaken the modification of the objects of the trust which are not in consonance with the condition of the registration, then within 30 days from the date of the modification of the object, they need to apply for the re-registration. And this will be again a final registration which will be given to them for a period of 5 years or 10 years as the case may be from the AY in which the application is made. So you can write down over here. One second. Is this clear? Yes. Then we had started
Yes,
with
ma'am.
the statement of total income, which is we start with the income from property held under the trust for charitable or religious purposes in India. Here we take the gross receipts, not the receipts after expenses. So here we take before expenses. Then we consider the voluntary contribution other than the corpus donation. As I told you, for the corpus donation, the donations which are received specifically to be stated as forming part of the corpus of the trust, these are not considered as the income, these are exempt, provided these are deposited in the mode specified in section 11.5. And if the corpus donation is given for the repair and renovation of the religious trust, again it is not considered as income if it is applied for the same purpose for which it was received. The amount is not utilized for making the contribution or donation to any other trust and it is invested in the mode specified under section 11.5. Are we clear?
Yes, ma'am.
If any of the conditions are violated, these will be deemed income in the previous year of the violation of condition. Then we had spoken about the anonymous donation. How are the anonymous donation taxed?
30% it will be taxed, but total receipt, total donation, from total donation, we have to take 5% of it or 1 lakh rupees, whichever is higher. We have to deduct it from anonymous donation and take it in normal voluntary
Correct.
donation, and other take as anonymous donation, and 30% tax will be charged.
Correct. So anonymous donation are taxed under 115 BBC at the rate of 30%. In excess of 5% of total donation. Total donation will include the voluntary contribution, anonymous donation as well as the corpus donation. Right? Or rupees 1 lakh, whichever is higher. So up to this limit, it will be considered as normal donation, which is eligible for the application of income. And this 115 BBC is not applicable in respect of trust created for wholly religious purposes as well as trust created partly for religious, partly for charitable. However, if the trust is created partly for religious, partly for charitable, the 115 BBC will still be applicable if the donations are received for educational or medical institution. And in case of the corpus donations received as anonymous donation by the trust, if the corpus donations are received as anonymous donation, then in that particular case, these will be taxed under 115 BBC. Clear? Then income from government securities or grants, capital gain, this will give you the gross receipts. Then you have the ad hoc exemption of 15%, which is available if it is invested in the mode specified in section 11.5. And balance 85%, you will allow it as like on the basis of whatever you make as the application. So first is the operational expense. Second is the capital asset that we discussed. How the operational expenses will be allowed?
Fully allowed. Depreciation is not deducted from it.
No, on the what basis do you allow that?
Ad hoc basis.
No, not ad hoc basis. So operational expenses that we discussed are allowed on the payment basis, irrespective of the method of accounting followed by the assessee. So expenditure incurred but not paid is not considered as the application of income. Expenditure in cash greater than rupees 10,000 is not allowed. Expenditure on which tax is not deducted or deducted but not paid before the due date under 139(1) will be allowed. 30% of it will not be allowed as application. It will be allowed as application in the previous year in which tax is deducted and paid. Right? Then capital asset, entire amount that you spend is allowed as the application. However, depreciation on capital asset we will not allow. Clear? Yes or no?
Yes, ma'am.
Okay. Now third is repayment of the loan. Repayment of the loan. Right? So when you repay the loan, that is allowed as the application of income. So when you, let's say, borrow the funds from a bank and you buy the capital asset, will it be allowed as a deduction or application?
No,
No,
ma'am.
because you are not making the application out of your own funds. You are borrowing the funds and then making the application. That will not be considered as the application of income. So application from the borrowed funds is not considered as application. However, when you repay the loan, repayment of the loan is considered as the application. Are we clear? So application out of the loan or borrowings is not application. If I pay salary to my staff from the borrowings, that is not application. However, it shall be treated as the application in which the loan or borrowing is repaid, subject to certain conditions. What are the conditions? Number one, the application should be in India. The application from the loan should have been in India. It should not be that I have taken the loan and paid out done some application outside India. The application from the loan should not be given as a corpus donation to another trust. Third, the application of the loan when it is done. So, if on any expense TDS was to be deducted, that should have been deducted. So, TDS is deducted on expense made from loan. And when the application is made for payments to a person, that should not be more than 10,000 in cash. So application should not be in cash greater than rupees 10,000. Then the application is basically not for the benefit of any specified person under section 13(3). So application should not be made for the benefit of the specified person, should not be for the benefit of. specified person under section 13(3). And the repayment of the loan is made within a period of 5 years from the end of the year in which the application was made from the loan. So, repayment of loan clear? Now, who is a person referred to in 13(3)? We'll talk about. But let us understand, let's say, for example, if I have taken rupees 13 lakh is a loan, right? Or 15 lakh is loan. Let's say rupees is loan. And 5 lakh is applied for purchase of building. And I have repaid in the current year 2 lakh rupees. Sorry. So in that particular case, how much will be considered as application?
2 lakhs.
2 lakhs, right? Because 5 lakh is the application from the loan, that will not be considered as application for the income. 2 lakh, which is repaid, if all these conditions are satisfied, then 2 lakh will be considered as the application. Clear? So this is considered as the application of income. Yes? Any question, any doubt? Yes or no?
No, ma'am.
Is this clear to everyone? Yes? Okay. So that is first for the repayment. Now understand that if I am applying from the corpus donation, if I am making any application from the corpus donation, that is also not considered as the application. So, application from the corpus donation is not considered as the application of the income. So, what will be considered therefore as the application? So, any amount paid towards the corpus is not considered as income. It is exempt. Similarly, any amount which is paid towards the corpus, that is also not treated as the application of income. And any amount that you utilize from the corpus, that is also not considered as the application. Are we considering? That amount paid out of the income by way of corpus donation is not to be considered as application. So any amount which is credited or paid, right, out of any income of the trust to any other trust which is a contribution towards the corpus. That is also not considered as application. Secondly, any amount paid out of corpus donation. That is also not considered as the application. Is this clear till this much? Yes?
Yes, ma'am.
Okay. So what is then considered as the application of the income? So corpus donation utilized towards its object is not application. However, the amount will be considered as an application in which the amount is invested or deposited back into the mode specified in 11.5, subject to certain condition. So, it will be considered as application in the previous year in which the amount is deposited back in the modes specified under section 11.5, subject to certain conditions. So, when the corpus donations are received that are exempt from income, correct? Provided they are invested in the mode specified in 11.5. So, any application made from the corpus donation is also not considered as the application of income. However, it will be treated as application in the year in which you deposit the amount into the mode specified in the 11.5. Subject to certain condition. What are the conditions? The conditions are again these same only. What are there for the repayment of the loan? So the same set of conditions are applicable with respect to the corpus donation also. That the application from the corpus donation should be for the purposes in India. Application should not be with respect to the corpus donation to any other trust. If any expense is paid from the corpus donation, the TDS should be deducted on that. The application should not be in cash. Application should not be for the benefit of the specified person, and the corpus investment which is made into 11.5, the investment back into the corpus in 11.5 modes should be within 5 years from the application from the corpus. Are we getting this point? Yes or no? So you can just change over here. Instead of your loan, we will write application from the corpus. But the conditions shall remain the same. Are we clear? So let's say, for example, rupees 10 lakh is received as voluntary contribution. With the specific direction, it shall form part of the corpus of the trust and shall be utilized for the purchase of building. Two lakh is utilized for the construction of building. And 1.5 lakh is deposited in the mode level 5. Now, what will be considered as the application of my income?
One 1.5 lakhs.
Correct, 1.5 lakhs. Yes. So, this will be considered as the application of my income. Is this clear? Fine.
Yes, ma'am.
So, this is another way of application that is allowed. So, what is not allowed? Again, quickly recap. The expenses which have been incurred but not paid, expenditure in cash more than 10,000, expenditure on which tax is not deducted. So 30% of that is not considered as application. Then capital asset is allowed as an application, but depreciation on that is not. Application from the borrowed funds cannot be done. So that will not be considered as application. But when you repay the loan within the 5 years from the date of application, and if your application has been made towards purposes in India, expenses on which tax has been duly deducted, expenses are not in cash more than 10,000, and the application is not for the payment as a corpus donation to another trust or should not be for the benefit of specified person, then in that case, repayment of loan will be considered as the application. The same way, corpus donations are not considered as income. So any application from the corpus donation is also not considered as application. But we will consider it as application when you deposit the funds back into the mode specified in 11.5, subject to all of these conditions. Clear? Yes or no?
Yes, ma'am.
Fine. Now, what else is considered as the application of income? So, donation to any other trust. If we make the donation to any other trust which is registered either under 12AB or under 1023C, irrespective of the object of the trust, is considered as the application. So, donation paid to any other trust, irrespective of the objective. So, any amount paid as a donation to any trust which is either registered under 1023C or which is registered under 12AP shall be treated as application of that particular year. So let us write it over here. donation to trust registered under section 12AB or 1023C. Right? 1023C. This, however, shall be considered as the application only to the extent of 85% of the amount of donation. So not 100% will be considered, but only 85% of the amount will be considered as application. And this is irrespective of the object of the trust. Clear? So not 100%, but only 85% we are allowing. Right? So what happens is, otherwise, see, if my income is there, out of which a 15% is the ad hoc exemption or application that I consider. Now 85% is what I have to actually apply. Now if I give the entire 85% to the another trust, then that trust will do what? That trust again will reduce 15% ad hoc application and remaining amount will allow it to remaining amount will apply it towards another trust. So that way a cycle will go on and on. Are we getting this particular point? So to prevent that, the government has said that we will not allow the 100% of donation, which is paid to another trust as the application. We'll only allow 85% of the donation as the application of the income. Is this clear? So let us look at a question from your module. So let's say this 300 rupees is the income of the trust one. Right? Now the donation it makes to the another trust is 100. Right? But from this 300, what is the ad hoc application?
15%.
15% comes to how much?
45.
45.
45. Right? So 300 minus 15%, 255 is available to me for the application of income. So income which is required to be applied is 255. Correct? Yes. Now, what I make donation to another trust is 100. So this entire amount is not going to be considered as application. What is going to be considered as application is 85% of this 100, which comes to how much? 85. Right? Yes or no?
Yes.
Correct. But now if you look at from the trust perspective, its income that it has received is 300. And the 255 is the income which is available to be applied. Now, if we are only considering 85 as the application, right? But it is technically paid how much? 100. But how much we are applying? 85. But how much does it have in hand to apply? If we consider 85 only as the application, then what will happen? It will be considered as the income of the trust, but it can't apply that for any other purpose because it doesn't have any money in hand. What is the cash money that the trust has? 300 minus 100. Right? 300 is my income, out of which 100 I have given to another trust. So I have actually 200 only in my hand. I can only apply 200 balance. If you take this particular amount, 255 minus 85, I have 170 remaining for the application. Right? So out of 255, 85 I have applied. 170 I still have to apply. Yes or no? So out of which, if I take 200 as the cash income, 300 minus 100 that I have. So 200 minus 15% if I take, it comes to 170 only. Yes or no? But the balance income which is available for application is 200. 300 minus 100, the cash income. And out of which how much I have to apply actually? 170, which is 85%. Correct? Yes or no?
Yes.
Yes. So out of which I have applied already 85. 85 I have already applied. Or rather 100. So 200 is what I have. An actual application that I need to make now from 200 is 85%, which is 170. So, what is the amount that I need to invest in the mode specified in 11.5? 170 minus 200, 30. Correct? Which is 15% technically. Yes or no? So, if you look at it, if you do 300 ka 15%, that comes to 45. But what the CBDT circular is saying is, you don't take 300 ka 15%, you take 200 ka 15%, which should be given to me to be accumulated in the modes 11.5. Because if you tell me to do it from 300, I don't have 300 in hand. I have already given 100 rupees to another trust. I have only 200 remaining with me. So even though you consider 85 as the application of my income, but then you are requiring me to spend 170 as the another application. Are we getting this point? Yes or
Yes.
no?
Yes.
So therefore, what they are saying is the CBDT has given the circular which says that out of 255, if 85 you are considering as application, then 170 is I have to further apply. But I don't have that much money because I have given 100 rupees, not 85 rupees to another trust. So the 15% which should be deemed allowance should be of 200 and not of the 300. So my exemption will remain the same. My entire income will be remaining exempt. Clear? Yes or no? So my total application will be what? 170, which is this particular amount. If I apply it, correct? 100 that I have already spent and 30, which is the deemed allocation. Clear?
Clear. 85 we are considering from the trust who we have paid.
Correct. Similarly, if you look at this 100, 85 is applied, which is required to be applied. Now, donation given to the another trust is entire 100. Out of which I am considering application of income as only 85. But now, the balance 15 which is there, I have to apply. I don't have that money. How will I deposit in the mode specified in 11.5? I don't have money in hand. This entire 100 I have given to another trust. So even if you consider 85 as the application of income, but I don't have money to deposit in the modes in the level 5 because this 15% also needs to be deposited. This 15% ad hoc application which is given to me has to get deposited. It is not ad hoc as in like even if I just put it with me, I will get this 15%. So if you recollect, I told you that the 15% ad hoc application of income is subject to that you invest in the mode specified in level 5. But here I had 100 rupees out of which 85 is the application is required, but I have entirely paid 100 rupees to another trust. So how will I spend 15% in the mode specified in 11.5? What are the modes specified in 11.5? Is nothing but the government securities. How will I invest in that? I don't have the money. I've given entirely to the other trust. So here if you look at it, the application of income, the income available for application is nil. So I can't put 15%. So this entire 100 then will get exempted. Are we clear? Yes or no? Any questions, any doubt? Okay.
Will there not be violation of this because his trust is transferring 100% of its fund to another trust 3? So
Correct.
will there not be any violation because 85% it has to?
15% is my ad hoc exemption or ad hoc application which is given to me. Right? Now, if I donate to another trust, so what the law says is that it will be considered to have applied 85% for the purpose of charitable or religious activity. But if I have donated entire amount, I don't have the money, how will I put this 15%? Then they are saying in that particular case where we have given the amount to another trust, only in that case, it is clarified that 15% of the donations shall not be required to be invested in the mode specified in section 11.5 as the entire amount has been donated to another trust. Got it?
Yes, got it.
Okay. So let us write it over here. So if let's say for example, 300 is my income, ad hoc application is 15%. This comes to 45. So 255 is available for exemption or available for application. Correct? Now out of this 255, I have paid to another trust 200 or 100. Let's say I paid to another trust 100. Right? So what is the application? 85%, which comes to 85. So this is allowed as the application. Right? Now, however, the remaining income actually eligible for application is actually available for the application is 300 minus 100 comes to 200. So what I was doing here is I was considering this 15 rupees out of 100 that I have paid. Now that I don't need to consider. So essentially what they are saying is, the CBDT circular is saying that if you have given the amount to another trust, then you don't need to put 15% into the mode specified in 11. So what they are saying here is, if the amount is given as donation to another trust, 15% ad hoc application not required. In modes specified under section 11.5. Are we clear? So here what we are considering, then we are considering 200 into 15%, 30 as the ad hoc, and balance 170 is available for application. Are we clear? Yes or no? Okay. Next is what is not allowed or what is not considered as application. So as I said, donation to another trust is eligible for application up to 85%. However, any amount paid towards the corpus of the another trust is not considered as application. So any amount paid to the corpus of the another trust is not considered as the application. So amount paid towards the corpus of another trust is not considered as application. Or any amount paid out of my accumulated income to any other trust. So if I have accumulated the income, like I will use it for some specific purpose, and I'm paying the amount from that to another trust, that will not be considered as application. Are we clear? So the donation that needs to be made to a registered trust has to be from the current income, not from the accumulated income. And that should not be towards the corpus of another trust, even if it is from the current income. Clear? Yes or no?
Yes.
Okay. Then next is with respect to the application of the income. Now, these are the amounts which are allowed as the application. Now, let's say, for example, if the trust is not able to apply the income. Okay. Let's say, for example, for some reason, the trust is not able to apply the income. %85 of its income or any portion of that income. So in that particular case, it has an option. So where the trust is not able to apply the income, let's say for reason that the income either has not been received during the year. So let's say if the trust follows the accrual basis of accounting, wherein the income is recognized, but it has not been received. So trust has not received the income. So income is accrued. but it is not received because I have to apply actually. I need to spend actually. That is only when I get the application. Even for the expenses, right? I don't get the expenses on accrual basis. I get only when I actually pay the expenses. So in that particular case, I have an option of the deemed application. We'll see that. But first understand what are the cases in which the trust has not been able to apply. Or in the second situation, I have received the income, but it is received very late. Let's say I have received in the last week of March. I have received the income in the last week of the March. So in the first case, I have either not received the income or I have received it, but I have received it very late, because of which I was not able to apply it. So in the first situation where the income has not been received, then there is an option that this will be considered as the deemed application. We will consider that this income is applied. But what is the condition? The condition is that the application will be made in the year in which the income is actually received or in the next following previous year. Are we getting it? So the condition is the income should be applied in the previous year of receipt of income or in the next following previous year. So let's say, for example, if we are talking about this as in previous year 25-26 you have not received. So this should be applied maximum in the previous year. Let's say it is received in 26-27 or in previous year 27-28. However, if the amount is claimed as deemed application but have not been so applied either in the next year in which you have received or in the subsequent previous year, then in that particular case, it will be considered as deemed income of the next year, of previous year 27-28. So, if not applied, then this will be considered as deemed income of previous year 27-28. Clear? Is this clear?
Clear.
Okay. In the second case, when the income is received late, so in that case, it will be again considered as the deemed application. We will allow it as the deemed application. However, the condition is it will be applied in the next previous year. So let's say we are talking about, this is previous year 25-26, it is received late. So I should maximum apply by 26-27. And again, if I not apply, this will be considered as deemed income of that year. So if not applied, then this will be my deemed income of previous year 26-27. And this shall be taxable under section 115 BBI. We'll have a look at it. Clear? Yes or no?
Yes, clear.
So this is an option available to the trust. This is not something that it is mandatory for the trust to, it will be considered as deemed application. So this is an option. So this option is given to the trust. And how can it exercise the option? So in this case, the trust can exercise the option by filing a particular form. By filing the form 9A. By filing the form 9A. So, this has to be filed 2 months prior to the due date of income tax return under 139(1). Clear? So this 9A has to be filed 2 months prior to the due date of the return of income. However, the CBDT has given certain relaxation in respect of this. The CBDT has given some relaxation that even if you do not file within 2 months prior to the due date of return of income, even if you do not file prior to the 2 months from the return of income, then in that particular case, it will be still allowed. Like even if you file it by the due date of the return, it will still be allowed. This option will still be allowed. So CBDT circular has given, so the act says 2 months prior, but the CBDT circular says even if filed before the due date of 139(1), we can allow this particular option. Clear? Any questions, any doubt?
Clear. Clear.
Okay. Next, if let's say for example, the trust is not able to apply the income, not because of these reasons, because of any other reason. If let's say the trust has not been able to apply for any particular reason, it can be any. Now, in that particular case, it has an option again to accumulate its income in the mode specified in section 11(5). So, the trust, if it can't apply for any purpose, then it can accumulate the income. Accumulate as in it can put the funds in the mode specified in 11(5), and it can take the permission from the AO that okay, it wants to use it for so and so purpose, but it has not been able to do it at this point in time. And it will do it, let's say, after 4 years or 5 years later. So the trust may accumulate or set apart the income for future application. But the trust has to make the application in Form 10 for the accumulation of income, specifying that what will be the purpose and in what period it will use this income. Are we getting this particular point? So, if the trust is not able to apply the income, it has option to accumulate the income. It has the option to accumulate the income in the mode specified under section 11.5. So the condition here is first option to be exercised in form 10 by stating purpose and period of accumulation. Clear? And the maximum period can be for which it can be accumulated 5 years. Maximum period it can accumulate is for the 5 years. And again, this form 10 has to be filed 2 months prior to the due date under 139(1). However, again, CBDT has relaxed this up to due date under section 139(1). You can file up till the due date 139(1). Plus the accumulated amount to be invested in the modes specified under section 11.5. And next, the return of income needs to be filed under section 139(1). Are we clear?
Yes.
Okay. So, by this way, again, you have an option to accumulate your income. So, if you want to accumulate, you have to state the purpose that, okay, whether you are going to utilize it for building, whether you are going to utilize it for the, so and so expenditure, you need to tell the assessing officer by making an application. And remember, I told you that you cannot make the donation to another trust out of the accumulated income. Yes or no? So you don't need to make any donation to another trust. So any application of income from the accumulated trust to make the donation to another trust is not considered as the application of income. Clear? So you can write it here again. Any donation from accumulated income to any trust is not application. Clear? Now, what if you fail to satisfy the conditions of the accumulation? So, failure to satisfy conditions of the accumulation. What kind of condition? Accumulated income is applied for other than charitable or religious purpose. Right? Or amount is not accumulated. You have made the application, but you have not invested the amount in 11.5. Or it ceased to be accumulated. So amount ceased to be accumulated or amount ceased to remain invested in modes specified under section 11.5. Or the amount is not utilized for the purpose for which it was accumulated. Or the amount is paid to any trust from the accumulated. The accumulated amount paid to any trust. So although this will not be considered as application, but this will be considered as my deemed income of the previous year, in which either income is applied for other than charitable or religious purpose, or in which income is ceased to remaining accumulated, right? Or income in the year which ceased to remain invested, or it is not utilized for the purpose for which it is accumulated. So in the last previous year, so let's say for example, if I have accumulated the amount for 3 years. So in the third year, it will be, if I have not used until third year, it will be deemed income of that year. Or income previous year in which it is paid to any trust. Previous year in which income is paid to the trust. Clear? Any questions, any doubt? Yes or no? Yes, any questions, any doubt?
No, ma'am.
No? Okay.
Ma'am, if after 3 years, they will give the form and increase the date for 5 years. It will
No,
be
no, they
okay.
can't do that. They have to do it at the year in which they want to accumulate it, not after 3 years.
Okay.
So if I want to accumulate today, for this year, I will file the form before my this year's due date, not after 3 years. And I have to tell that how many years I want to accumulate and for what purpose. Fine?
Yes, ma'am.
Okay, so let's take a break over here and then we start after the break. Let's take a break. the application? Yes? Any doubt, any questions? Fine?
Clear.
Okay. So now what I want you to understand is the application in respect of the capital gain. So if you recollect in the last class, I had told you that there can be income by way of capital gain over here. Now from this, what will be the application of income? Sorry. So from this, how will you consider the application of income? So that is the question that we need to understand, right? So just write it down over here. Application in respect of capital gain. If my entire sale consideration is utilized, for acquiring new asset, then entire capital gain is considered as application. And where part of the sale consideration is utilized, for acquiring new asset, application will be cost of new asset minus the cost of the old asset. Are we clear? Yes. So where the transfer of the capital asset is done, there will be capital gain, right? Now, if the entire amount of capital gains have been applied for charitable or religious purposes, like then in that particular, if the entire consideration has been invested, then the entire amount of the capital gain would be considered as to be deemed to be applied, right? However, if only a part of the sale consideration is utilized for acquiring new asset, then the capital gain which will be deemed to have been utilized will be equal to the excess of the proceeds over the cost of the asset transfer. So let us take an example from the module itself. So let's say, for example, original cost of the asset transferred is, let's say, 1 lakh. Consideration for which it is transferred is 1.5 lakh. Now, cost of the new asset acquired is 1.5 lakh, and in the second situation, it is 1.2 lakh. So what will be the capital gain which will be applied for the purpose of charitable purpose? What will be the application here in the first scenario? So here the capital gain is 50,000. Yes or no? So
Yes,
if
ma'am.
1,50,000 is invested in the new asset, then entire 50,000 will be considered as the application. What will be in situation 2?
1,20,000 minus 1 lakh.
1,20,000, which is a new asset, minus the cost of the old asset. Clear? So 20,000 will be considered as my application. Okay? Any question?
Clear.
Okay. So this is how you need to consider with respect to the application of capital gain. Now the second situation is if the transfer of the capital asset is in respect of trust which is partly for charitable and partly for religious. This is for wholly religious, wholly religious or wholly charitable. This was the first situation in case of wholly religious or wholly charitable. If it is partly religious, partly charitable, and when only a part of the capital asset has been transferred, then the appropriate fraction of the capital gain would be deemed to be applied. Where the whole of the consideration is utilized, then the fraction of that particular capital gain will be considered. And when it is part, then in that particular case, the cost of old asset minus cost of new asset, then the fraction of that. What is the fraction? The fraction is basically the income derived from the capital asset, which was for that charitable or religious purpose. So let's say for an example, if the cost of the asset transferred was 1.2, the consideration was 1.8. So 60,000 was my capital gain. Now cost of the new asset acquired is 1.5 lakh. Right? So 180 minus 120 is 60,000 my capital gain. The appropriate fraction is 2/3 of the income derived is utilized for the charitable purpose. So only 2/3 of 60,000, 40,000 is what we will consider as being applied. So here 40,000 we will not consider because not the entire consideration has been invested. Only part has been invested. So 150 minus 120, 30. 30,000 into 2/3 we will consider as the application. Clear? Yes
Clear.
or no? Any questions, any doubt with respect to capital gain? Sorry, with respect to entire charitable trust concept till now, what we have understood. Yes, shall we solve a question on this point? For the
Yes,
entire
ma'am.
charitable application, let me share the screen then. One second. Is the screen visible?
No, ma'am.
Once. Let me know if it is visible now. Yes?
Yes, ma'am.
Okay. So let us start with this question. So, a public charitable trust, which is registered under 12AB, runs a hospital and also a medical college. It has furnished the following information for the previous year 26, ended 31st March 26. Gross receipt from the hospital rupees 425 lakh, including the voluntary contribution towards the corpus. Now, voluntary contributions are given from public rupees 32 lakh. It includes the corpus donation of 3 lakh from another charitable trust and anonymous donation of 5 lakh. Note, voluntary contributions are included in the gross receipt given in 1 above. So, how will you start with it?
So first we consider the gross receipts, and
Okay.
we will exclude these voluntary contributions.
Sorry. Yes. So first we'll consider the gross receipt. That's right. Will we consider the entire gross receipts?
No, corpus donation is there. We have to deduct, means exclude it.
Correct. So 425 lakhs are given as the corpus in which includes the corpus donation. So how much we are going to exclude it? Yes. Out of 425, how much will exclude it?
3 lakhs and 5 lakhs of anonymous donations calculation will be done.
Correct. So first of all, I'm just considering the gross receipts. Okay. So from 425, let me exclude the entire 32 lakhs. So this will come to 393 lakhs. Right? Now, will we take the gross receipts here or the net receipts?
Gross receipts.
We'll take the gross receipts, right? As I told you, we will consider as per the institute as well as the judgment of Supreme Court that they have quoted on the program of community. They are saying that we'll take the gross receipt. Okay. Although the section says income from the trust, income is usually the net income, but what ICAI follows is it takes the gross receipts. Okay. Then income from business incidental to the main objects 2 lakh.
Including that income from business.
But what about the 20% criteria? Do we need to check here that?
It's hospital and medical college.
Correct. So therefore,
20% criteria is not fulfilled because incidental to main objects is it.
yes. So this is incidental to main object. Secondly, here this is falling under the education and medical relief. Okay. So here we will not test the 20% condition. The 20% condition has to be tested when? When the object is advancement of any other object of general public utility. Yes or no?
It's not.
So here 20% condition not applicable as object is medical relief. Right? And you will write in the exam, assume separate books of accounts are maintained. Right? Because if you have any incidental income, you need to maintain the separate set of books of accounts. Yes or no? Yes, students?
Yes, clear.
Okay. Then comes the voluntary contribution received from the public. This is my income. It includes the corpus donation of 3 lakh. So I will exclude the corpus donation. This is exempt. Now what sorry, what about the anonymous donation of 5 lakh?
$1.6 lakhs is exempted.
Correct. So for the anonymous donation, I don't know what problem it has. Let me do one thing. So no, what is the problem? What were my gross receipts? 393 lakh. For total donations, we will include all the donations, including anonymous and corpus, right? This comes to 1.6 lakh. Now, what is the anonymous donation I have received? 3.4 will be taxable under 115 BBC, right? Then hospital operational expenses, this does not include the capital expense and depreciation, 105 lakh. Yes,
Supplied fully, ma'am.
it is considered as the application. Yes or no?
Ma'am.
Correct? But let's say, for example, if I mention here, out of 105 lakhs, rupees 10 lakhs has been incurred but not paid during the previous year. Then
95 lakhs.
95 lakh. So here I will consider from the application of income, operational expenses 105 minus 10 lakh. Right? So only expenditure paid is considered over here. Right? Fine. Income from medical college solely for educational purpose, rupees 10 lakh. Gross receipt of the college was 100 lakhs.
We will add gross receipts of 100 lakhs to the total gross receipts.
Yes. But isn't there some condition? Yes. What is the condition for the educational institution?
It's not received in cash more than 10,000 TDS.
No. No. See, if you recollect here, what had we discussed? Educational institution existing solely for educational purposes, where the combined annual receipts are less than 5 crore, then in that case, they are unconditionally exempt. Yes or no? So here, its income is 100 lakh, which is 1 crore. So, whether can you claim the unconditional exemption?
Yes.
But what are the combined receipts with the medical college?
No, ma'am, no, ma'am. 425 plus 100 lakhs, so 525 lakhs.
Yeah. So we can't, right? So this will also be taxable. Okay. So here, income from medical college, this is 10 lakhs. As the combined receipts of medical college plus hospital clear?
Ma'am, then what about this 100 lakhs?
This is a gross receipts. These are gross receipts. So you can either take your 100 lakhs and then claim the expenditure in respect of that. Or I'm just taking 10 lakh. So up to you. Like we can take your gross receipts 100 lakh and then claim 90 lakh as the expenses below. So here, let's say for example, if I take this as, let's say I take the gross receipts only, 100 lakh. And then I take the operational expense of the college, 90 lakh over there. Fine? Okay? Next is gross receipt given in one above includes a sum of 55 lakh which has accrued but not received. And a sum of 18 lakh was received only on 31st day of March 2026. Yes? What will you do?
The income is not allowed, ma'am. It is not received in current year.
So it is not received and this has been received but on the last day of March. So as I said to you, you can consider this by exercising an option in form 9A. You can consider it as deemed application for income not received or received late. So which is 55 and 18 lakhs. By filing form 9A. Before the due date under section 139(1). So you can write this is the CBDT circular relaxing the due date. Yes or no? So this will be considered as deemed application. Clear?
Clear.
The trust set apart rupees 80 lakh for acquiring the new building to expand its hospital. Amount was paid in December 2026 when sale deed was registered in its name.
Expenditure is allowed when it is paid. So next year these expenses will be allowed.
Correct. So when it is paid, on that year you will get the expenses. But here you can accumulate it for the purposes of purchase of building in this year by exercising the option. Right? So you can write here again deemed application through the accumulation of amount for building 80 lakhs by filing form 10 before again the due date under 139(1). Yes? So you can accumulate this amount and claim it as deemed application. Clear? But you need to invest till that time. modes specified under section 11.5. Are we clear? Yes or no?
Yes, ma'am.
In June, this should be 2025, the trust purchased and installed a new computer software for 28 lakh. Rate of depreciation is 40% as per the Income Tax Act 1961.
The depreciation will be allowable.
Depreciation will not be allowed. The purchase of computer will be allowed, right? You will not get the depreciation, you will get the computer software. Clear? So, computer software. Depreciation is not considered as application. Clear? So 28 lakh. Next is the trust incurred 35 lakh towards purchase of laptop, computer and printer. So again you will get here application. It repaid a loan of 15 lakh taken earlier for the construction of hospital building.
Allowed, subject to certain conditions.
Correct. So repayment of loan is allowed. But application from the loan is not allowed. Okay. So 15 lakh. If the question provided, let's say the loan was taken for rupees 30 lakh and was used for purchase of building for rupees 30 lakh. So with respect to the application from the loan is not allowed. Okay. Repayment of loan is allowed. Donation of rupees 2 lakh towards the corpus to a trust registered under 1023C.
Not allowed, ma'am. Corpus donation not allowed.
Correct. Corpus donation is not allowed. What about the donation of 1 lakh paid by bearer check?
Not allowed, ma'am. It's
Why?
like about 10,000. This is like cash.
Correct. So about 10,000 in cash is not allowed here under the application. Are we clear? Yes. So here this will not be allowed as application. So donation in bearer check and towards the corpus of is not application. The building was sold for 10 lakh. It was purchased in 1213. Index cost was 4.5 lakh. The amount of sale consideration was invested in building for 13 lakh. Yes.
entire capital gain will be allowed.
Entire capital gain will be considered as application, right? Because here we are investing the entire amount. So this 10 minus 4.5 lakh, 5.5 lakh will be my capital gain. So I'll write here, sorry. And then here I will allow application. Entire. So 5.5. Clear? Now here my gross receipts are going to be how much? 393 plus 2, 24, 1.6, 100, 526.1 lakh. Yes, everybody getting that?
Yes, 526.1.
Less ad hoc application, which is how much? 15%, provided it is invested in modes under section 11.5. So then balance application I have to consider is for 447.185. Clear? Out of which 95 minus 90 minus 55 lakh minus 18 minus 80 lakh, 28 lakh, then 35 lakh, then 15 lakh, and then 5.5 lakh. This gives me 25.6865 plus anonymous donation taxable under section 115 BBC 3.4 lakh. So my total income will be this much. Yes? Are we getting this? Yes or no?
Ma'am, last adjustment is there, no? About this capital gain. 13 lakhs building is purchased. Acquisition is 4.5 lakhs. And it's sold for 10 lakhs. So we have taken 5.5 lakhs as a, and what about this 3 lakhs?
The sale consideration that is invested in new building? See, we are allowing this 10 minus 4.5, which is my amount that I'm charging to tax is only this particular amount, which is 10 minus 4.5, which is 5.5. So I'm not charging the entire 10 lakh to the income. I'm offering only 5.5. So if I'm considering only 5.5, the application also which I'm considering over here is going to be restricted to the capital gain that is taxed in the income. Clear?
Yes, ma'am.
So see, my capital gain which is considered in my income, that is what I'm allowing it as the application. Now you are asking, I think regarding this, that over and above 10, there is 13 lakh which is paid. So you can take an assumption that this 3 lakh is made as a payment from the income of the trust. So then you can consider this an application. That is not a problem. But you will have to make that assumption that this 3 lakh is out of the income of the trust which has been charged to tax, and therefore the 3 lakh is what we are considering it as an application. But if you take the assumption that this 3 lakh is maybe, out of their self-investment, out of the corpus amount, then because we are not having that information in the question. So let's say the question says that this 13 lakh out of which 3 lakh has been funded out of the corpus of the trust, then you will not consider this as an application. Isn't it?
Okay, ma'am. Yes.
So if I am taking the assumption that this is out of the income of the trust, then certainly you can consider 3 lakh as the application. But if the question is not specifying, it can then otherwise you can assume that we are not taking this 3 lakh, assuming this has been paid out of the corpus of the trust. Fine. Any other question? But good point. Yes. Okay. Shall we proceed further?
Yes, ma'am.
Okay. Now understand one thing. We have considered the entire statement of the total income of the trust. Okay. Now there is this one section which is 115 BBI. Which is pertaining to the deemed income or the specified income. Now, what does this 115 BBI provides? This is a special provision in respect of the trust which has been introduced. What does it say? That the specified income of the trust will be taxable at the rate of 30%. Now, what are the incomes? Let us understand. Number one, income which has been accumulated in excess of 15%, where the accumulation is not allowed under the provisions of the Act. So, income which has been accumulated which is where accumulation is not allowed. Or the accumulation is done. The accumulation has been done. However, the income is not applied for the charitable or religious purposes. So either income is accumulated and accumulation is not allowed. What do we mean by accumulation is not allowed? Let's say where Form 10 is not filed within the due date. Or accumulation is allowed, but income accumulated is not applied for charitable or religious purposes. Or income cease to be accumulated. Or income cease to remain invested or income is not utilized for the specified purposes within the time. Or the income is paid to any trust. In that particular case, it is considered as deemed income. Isn't it? So it will be considered as deemed income where you violate these conditions. Yes or no? So if the accumulation is not allowed or the income is not applied for charitable or religious purposes, then this will be deemed income of previous year of violation, or income in which previous year of income when it is not applied. Here it will be deemed income of previous year when it ceases to be accumulated, or your previous year in which it invested, or previous year in which when, or you can write like this, specified previous year. This is previous year in which it is paid to the trust. Right? So, if the income is accumulated and the accumulation is not allowed or is not applied for charitable or religious purposes, or it ceased to be accumulated, or income ceased to remain invested, or it is not utilized within the specified time, or it is paid to any trust, what we also learnt over here, right? Failure to satisfy the condition of accumulation. So in that case, this will be considered as deemed income. And this year 115 BBI becomes applicable. Or if the income is not received during the previous year. Okay? So if the income is not received during the previous year, or the income is received late, and you have considered it as the deemed application. So this should be applied in the previous year of receipt or next following previous year. And this should be applied in next previous year. Yes or no? Now this income is not applied. Let's say this is not applied. So again, this is considered as deemed income of the previous year, deemed income of the following the previous year. So next to next year in which it was supposed to get applied. And in this case, deemed income of the following previous year. Right? Or income is applied for the benefit of prohibited person. So if any of these conditions are satisfied, then these specified income shall be taxed at rate of 30% on the gross basis. Gross basis meaning no expense will be allowed. That is, no deduction of expense. Clear? Any questions, any doubt? Yes or no?
Yeah, clear.
Clear? Also, this you have to consider from the perspective of that when you are not fulfilling these conditions, then your income will be deemed income and it will be taxed at 30%. Fine? Okay. Now, under section 13, the registration of the trust gets denied on the fulfilling of again certain criteria. So section 13 provides for the cancellation of the registration of the trust. So what are the provisions in respect of that? Let us try and understand. So section 13 provides that the registration of the trust can get cancelled in case certain conditions are fulfilled. Right? So the CIT has the power to cancel the registration of the trust under section 13. He can cancel the registration absolutely. But what are the conditions for that? Let us understand under section 13 in what circumstances or the not the registration per se but denial of exemption will be there. Not the registration, sorry, the denial of exemption. Denial of exemption. The trust will be denied the exemption under section 13 on fulfilling the certain condition. So let us understand one by one. When can the trust exemption be denied? So in the case where the income is held under trust for private religious purposes or for any particular community or section. If the income is for the private religious purposes or for any particular religious community or caste. Then in that particular case, the registration of the trust, the exemption of the trust will be denied. So when a trust is set up for charitable purposes, for the benefit of any particular religious community or caste, then in that case, the exemption will be denied. However, if a trust is established for scheduled castes, backward classes, scheduled tribes, women and children, that is not for a benefit of particular religious community. In that case, there is no problem. But where it is established for private religious purposes or for any particular community as such other than scheduled caste, scheduled tribes, then the denial of the exemption will happen. Secondly, if the trust which is there, the income of the trust is applied for the prohibited person under section 13(3). So in that case, there will be denial of the exemption under section 13. Are we clear? Now, who are the prohibited person or specified person under section 13? So under section 13, they have listed the person to which the income cannot be applied. So what are the prohibited categories? Author of the trust. Author or founder of the trust. Then any person whose total contribution to the trust exceeds 1 lakh or exceeds the 10 lakh rupees during the entire year. So any person whose total contribution to the trust during the year exceeds 1 lakh or in total during the year exceeds 10 lakh. So contribution to the trust exceeds rupees 1 lakh or rupees 10 lakh in aggregate. Then where the author or the founder is the HUF, then any member of the HUF. Where founder of the trust is HUF, then members of HUF. Then any trustee of the trust. Relative of the founder or trustee. Founder or the trustee. Any concern in which these people have substantial interest. Any concern in which these have the substantial interest. What do we mean by substantial interest? So substantial interest means a concern. If the concern is a company, then in that particular case, what do we mean by substantial interest? Where more than 20% of the voting power are there. And if the concern is the other than company, then 20% of the profit share. Yes? So if the payments are made to any of these persons, sorry, then the trust will be not allowed the exemption. Further, this has huge implication, both in the hands of trust and in the hands of this person also. In the hands of trust, there will be denial of exemption. One second. First, there will be denial of exemption under section 13. Secondly, the income will be taxed at the rate of 30% on gross basis under 115 BBI. See, income applied for the benefit of prohibited person. So not only there will be denial of exemption, but the income will be taxed under section 115 BBI at the rate of 30% on gross basis. Plus, there will be a penalty under section 271 AAE. So when the trust gives the payment or utilizes the income for the benefit of the specified person, that is considered as the prohibited use. So there is a penalty under section 271 AAE where the AO may direct the penalty equal to 100% of the amount of income so applied, where the violation is for first time. And for the subsequent violation, it will be 200%. So this is 100 and 200% of the income applied. Are we clear? Yes or no? Now in the hands of that person, in the hands of that person, in the hands of the prohibited person, 56 to 10 applies. Clear? Yes? Now when it is considered that, when is it considered that the income is applied for the benefit of such a person? What is prohibited use? So the income is deemed to have been used for the benefit of the person. Income deemed to be used for the benefit of the prohibited person when loans are given without adequate interest or security. If the income is used to give a loan to this prohibited person without either taking adequate security against that loan or without charging the interest. So giving interest-free loans or loan without adequate security. Right? Secondly, when let's say for example, the property of the trust is allowed to be used by them without charging the adequate rent, using the property of trust without adequate rent. Or if the amount is paid by the trust to these person for any services rendered by them, but the amount is in excess of the reasonable sum for that services. So, excess sum paid for services. Or if the services of the trust are given to these person without adequate remuneration. So services provided for inadequate remuneration. By trust for inadequate remuneration. Or the property, shares, security is purchased by the trust from these person for a consideration which is more than adequate. So excess payment for purchase of property. Or securities. Or inadequate payment received for property or securities sold by the trust to these persons. Right? Or there is diversion of income or property more than 1,000. So, diversion of income or property greater than 1,000. Or there is, if funds of the trust are used for investment in a concern in which these persons have the substantial interest. However, if the investment by the trust is less than 5% of the capital of that particular concern, then in that case, there is no problem. Then only in respect of the income from that investment, the exemption will be denied. Okay, so investment in concern in which the prohibited person has substantial interest. So if investment here should be more than 5%. If investment in concern is less than 5%, then exemption will be denied only with respect to the income from the investment. The remaining exemption will be allowed for remaining investment. Okay, so to the extent of investment you have made up to 5% in that concern, 5% of the capital of that concern, the exemption will not be denied. The exemption will be denied if you generate the profit from that investment on that aspect. But if investment is more than 5%, then the exemption will be denied entirely. Clear? Yes or no? Yes. Now, exemption will not be denied if the trust is running a school, educational institution, or a hospital, and the benefit is given to the prohibited person. Because it is possible that their children are studying in that school, they are taking the medical facilities from that hospital. However, these facilities should not be provided free of cost or at a concessional rate. So if it is provided free of cost or at concessional rate, in that case, yes, the exemption will be denied. So if the benefit is provided in educational institution or hospital, exemption not denied unless services provided free of cost or at concessional rate. Clear? What are the other cases in which the exemption gets denied? So, if let's say, for example, if the funds which are to be deposited in the mode specified in section 11.5, if you deposit the funds in mode other than 11.5, in impermissible mode, then in that particular case, the exemption will get denied. Deposit of funds in modes other than section 11.5. Right? So if you hold the shares of company, private company, then in that particular case, it is not permissible. Clear? Any questions, any doubt?
What is section 11.5? Mode of
11.5 we discussed, na? Like what are the modes in government securities, in post office saving bank, in cooperative bank you have to invest. So you have to keep the ad hoc application 15% in the mode specified in 11.5. You have to keep the accumulated income in the mode specified in 11.5. Clear?
clear.
Now this particular denial will not be applicable. Deposit of funds in modes other than 11.5. If you deposit, the exemption will be denied. But this is not applicable in the situation where if funds are invested out of business income. So if a trust has the business income, then there is no problem. You can deposit the funds of that business income in any mode. It is not necessary that you have to deposit in mode of 11.5. However, if a trust has income in addition to the PGBP and you're not maintaining the separate books of accounts for the business, then in that particular case, the exemption will be denied. So if a trust has a charitable object plus incidental PGBP and it maintains the separate books of accounts, then 11.5 will still be applicable. So if trust has charitable object plus PGBP and it maintains then 11.5 applicable. Clear? Yes or no? So if you maintain the
Clear.
separate books of accounts, then for that portion you can invest in other than 11.5, but not besides that. Or if the asset is held for not more than 1 year from the year in which asset is acquired. So you can deposit in the funds in mode, deposit the funds in modes other than 11.5, but asset should be held for less than 1 year. Clear? Any questions, any doubt? Yes or no? Then if the anonymous donations are received, right, that will also result in the denial of the exemption. So anonymous donation result in the denial of the exemption with respect to that anonymous donation, right? So as we have discussed, with respect to this particular amount, which is 5% of my total donation or rupees 1 lakh, whichever is higher. So this amount, over and above this amount, the exemption under section 11 is not applicable. Clear? Or the trust has the object of general public utility advancement and its trading receipts exceed 20%. Then in that particular case, it will result in denial of the exemption. So trust having object of advancement of general public utility and where my trading receipts are greater than 20% of total receipts. In this case also, the exemption of the trust will get denied. Clear? Yes or no?
Clear.
Okay, and the last one is if the trust does not submit either the return under 139(1) or the form 10 for the accumulation of the income. Or return of income not furnished. In these cases, the exemption of the trust gets denied. Fine? So this is about the denial of the exemption of the trust. And if the trust is denied the exemption, it will not be able to claim the application of the income. It will not be able to claim the exemption. Clear? So if it has the receipts more than 20% of the total receipts in respect of trading receipts, it fails to maintain the books of accounts, it fails to get its books of accounts audited and furnish the audit report, it fails to file the return of income. In these cases, the trust will not be getting the deduction of the application. Are we clear?
Clear.
Any questions, any doubt? Fine. So with this, we'll stop here for today and we'll continue in the next class.
Thank
Yes.
you.
Thank you. We can end the session. Yes. Right.